Okay, hello everyone, and thanks for joining our panel discussion today about the topic of scammers everywhere, how to find trustworthy investors in Web3. So this is a topic that has not yet been broadly discussed as far as I know, and I'm very, very happy that we have three amazing people with us today who are going to discuss this with us. And talking about this, let's give the space to you. So who wants to start introducing yourself and just telling us a little bit about yourself and what you're doing? It would be amazing.
Okay, I can sacrifice myself to go first, starting in alphabetic order, perhaps. So my name is Alexandra. I'm currently building my own startup, building a platform for the Web3 ecosystem that seeks to connect Web3 projects with one another and with investors, both VCs and angels. For the rest, I am a writer for the Cointelegraph, among other things, and I'm happily involved with a couple of initiatives as developed by the Frankfurt School Blockchain Center, more academic type of initiative, so one can say. And I previously worked at a blockchain startup.
Thank you. So I can go second if you like. So I'm Sarah. I was working for BMW for approximately 9 years in the financial department and also in the strategy M&A department. And I decided to quit my job about 1 year ago. And then I started with Vanagon Ventures. It's a small Munich-based venture capital company. And yeah, I had an amazing time with them. But since the 1st of January, so only like 2 weeks, I got the managing director of Blockchain Founders Group. And Blockchain Founders Group is a web3 accelerator, incubator, helping startups to grow, to build. And yeah, we are in a very early stage. And yeah, I'm super happy to be here today. And yeah, let's give the word to Oliver.
Hey, last but not least, my name is Oliver. I'm an industrial engineer who fell into the Bitcoin rabbit hole. And I'm also a startup founder. I'm CEO and co-founder of basenode.io, which is an accounting and invoicing platform for cryptocurrencies. Yeah, that's my short summary.
All right, then shortly to me, I'm Katharina, and I'm founder of Luna Vision, which is a Web3 marketing agency. So we are offering online marketing for Web3 companies. And as you can see, we have here today with us startup founders who are currently fundraising, startup founder who try to build a platform where you can find investors and investors, like an investor. So we know that there's also the topic of startups scamming investors, and we have gotten some messages prior to this event to talk about this too, but this is not the focus of this event. Maybe we will do another event in the future about that topic. Today we want to talk about investors or people who pose as investors who try to scam startups. And the obvious first question would be, how can this actually look like? Like, why did we enter this question is because I heard about such stories. And I know, Oliver, that you have to tell us something about that. So maybe can you start and give us a broad overview of your experience with this topic?
Yeah, sure. So the startup that I'm running is roughly 1 year old. And we already had one funding round in January of 2022. So like more or less exactly 1 year ago. And now we're doing a second funding round, which is our seed round. And well, yeah, usually it's the other way around. Usually it's more the risk of a startup scamming an investor or VC by just, I don't know, pitching an idea that they don't really follow through or stuff like that. But it also exists the other way around, which I learned from my experience in the past month, because me and my co-founder, we were fundraising. And well, when you're fundraising, you are usually registering your startup to some platforms where, like, for example, angel networks, but you also try outreach, just cold emailing business angels and VCs and so on to get some kind of response there. And some scams are really easy to figure out. For example, you try to contact a person and they're like, oh yeah, we would love to invest, but unfortunately, first of all, you have to pay us. So that's always a little bit of a red flag for me when I think, okay, you're actually the one with the money, but why should I pay you first? And this can have the form, which is very simple to see. For example, we had one investor who was from Asia, and he was like, yeah, I would love to invest, love your idea, love your startup. We sent him our pitch deck and our data room. He even signed a letter of intent and an NDA, all that stuff. But then in the end, he was like, yeah, well, since I'm not from the European Union, my documents have to be verified by the authority of his country. And then he forwarded me the contact to that authority, which obviously was not the real contact. And then a letter, like an email came back saying, hey, we would like to authorize these documents for the investment, but it will cost 2,800 euros upfront. And then after that, we can make the investment. So these are the things that you experience where you're like, okay, yeah, I'm not going to pay that money. This is probably not legit. But I would like to tell you one story, which is a little bit more elaborated. It will take maybe 2 or 3 minutes, but I think it's worth it. So we had this one with this one contact who wrote me a message on LinkedIn, and he was like, hey, I'm scouting for startups for like a unknown investor. He didn't really tell me the name. He was like, yeah, but he wants to remain an anonymous, and just yeah, send me your pitch deck and we will sign the LOI, and then we look at the data room, the usual process if you're looking for funding. Then he was calling me and he was like, well, we have an investor for you, and he wants to invest a large amount of money. He was like saying, oh yeah, it's like at least 1 million, maybe more, and we are not even looking for that large amount of money right now. But he then told me, well, this investor will only invest after he meets you in person. And well, this seems legit, because if I put myself in the shoes of an investor or a business angel, I would like to meet the founders in person before I give them money, right? So he was like, okay, you have to meet this investor in Paris, and it has to be very short term. So you should go there ASAP. And by the way, the investor is pretty new to cryptocurrencies. So you should bring a hardware wallet, like a ledger where you store your cryptocurrencies on. And also he likes whiskey. So if you could bring like a bottle of whiskey, then he will love you. And I mean, me and my co-founder, we were kind of inexperienced. We were like, okay, maybe these kind of business angels sometimes are some kind of eccentric personality, or they just, you know, like to be treated well. So yeah, we bought the bottle of whiskey, we got the hardware wallet, and then we booked actually a trip to Paris. And there we actually met these people in a cafe, in like a restaurant, corner restaurant. And they were then telling me, well, the investor is not here today, but we would like to make the investment and introduce you to him. And he already said yes to give you the money. But there is one small little detail, and that is that you actually have to pay us a finder's fee. So you have to pay us a fee from the investment. This is also not, so paying a finder's fee for someone who like makes the connection to an investor is not that unusual, I think. I mean, maybe Sarah, you can tell me more about this later, but I was like, okay, maybe then you should get your finder's fee. And they were like, yeah, but it shouldn't be like in a bank transfer, because we want it in crypto. So you should pay us the finder's fee from your private crypto coins on this hardware wallet. And that's why, and after that, after we got the coins, then we will introduce you to this investor. And of course, these people seemed kind of legit. Like they were like wearing nice clothes, speaking like, yeah, in a nice way, which is trustworthy. And at some point I can understand if people are tempted. They're like, oh wow, well, 1 million euros, maybe this is legit, right? Maybe that's the way it works. Of course, I did not give them my crypto as a finder's fee. And yeah, in the end, they would have taken my coins, of course, if I moved them to this hardware wallet. So this was kind of an elaborated scam, which takes a lot of effort. And well, in the end, I had to pay a trip to Paris and a hotel for one night, which is not exactly what you want to do if you're looking to raise funds because you're already low on cash, and then you make these trips. So for me, what I would like to take away from this discussion is how can I tell if an investor is really legit beforehand? Maybe you have some experience about that, or what the signs are.
I think
this is a really crazy story, but yeah, Katarina, go ahead.
No, it's fine. I think this is exactly where Sarah maybe can give us some answers. And I think this is also very interesting in terms of the app that you are building, Alexandra, right? Because I would also be super interested later if you could tell us how you try to figure out if the investors that are on your platform are legit or if they try to fool someone. But yeah, either way, Sarah or Alexandra, I think both of you have to say something about this. So
maybe I start with only a small portion or some thoughts, because you already said, Oliver, maybe I can say something about the finder's fee. So yeah, well, there exists something like that so it's sometimes VCs do have like advisories, and those advisors do get kind of an advisory contract. And if they kind of connect them with really great startups, there might be a possibility that they get money. But, and this is the important part about that, they don't get any money as far as I know. I've never heard about that. And I think I'm really in a very solid environment. So it always works that way. The investor invests and the startup is growing and growing. And in case there is an exit of the startup, then there is something like a fee for the person who connects the startup and the advisor. So maybe 5, 6, or 7 years later, and only in case that the startup grew and made a successful exit. So maybe just to clarify that, because I think this is important to understand. And I've never heard about an upfront fee. Maybe there is something, but I haven't heard it until now. So I can't say about, yeah, this is like, I think this is important to understand.
Yeah, thanks.
Yeah, I completely agree here. What I do want to say to start with is that I heard actually a lot of people mentioning that they use brokers nowadays. So indeed, people that connect Web3 projects with an investor, mostly VCs. And oftentimes these brokers are being paid 5, 6, 7, or 10% of the actual amount that is being raised from that particular investor. That appears to be a rather normal phenomenon as far as I've heard from other startups and projects. But I do have to say that in my opinion, there's a couple of risks here. First of all, I've heard also stories about brokers asking for upfront fees, indeed. So saying, yeah, we can connect you to this and this and this investor, but first you have to pay, I don't know, 10K, for instance, and then I will connect you to them. So certainly if it's an ex ante fee, I think it's especially dangerous. Although there are lots of great brokers and like nice people who are just very well connected due to their experience, etc. But I do have to also say that I do think that brokers in Web3, to an extent, it's a bit counterintuitive, right? Because in Web3, we all want to build a future that is more peer-to-peer, a future that relies less on intermediaries. So although brokers can be great people, I do feel that they are a little bit of a market inefficiency. And that's not nice to say. I know that it's not a very popular opinion, but ultimately, that broker is taking the VCs or the angels' money, right? And all that money that the VC is paying to the broker ultimately doesn't end up in the project for building, actually. So in my opinion, hence, one of the reasons indeed that I want to build this app, not just because it's not that I want to put brokers out of their job, right? No, that's not the truth. I really want to create a platform where projects can connect with one another, for instance, for partnerships or B2B deals, but indeed also really this founder and funder dimension. I want to spur that so that everyone can find each other more easily globally. All the investors globally, hopefully, will onboard the app. And so hopefully also all the projects will do, so that once that everyone is in one place, according to ethical standards, right? We're not going to do creepy things with data or asking huge fees or commissions. No, none of that, actually. I really think that is against the spirit of Web3. So once everyone is there, people can come to business in a fair manner. And then, yes, of course, happy to speak later or now. Maybe we should also learn more about your experiences, actually. But I would be happily later on tell you a little bit more about how I want to actually prevent that scammers are also going to onboard the app, because it's very important indeed. Yeah.
Yeah, you made a really good point, because we were like having kind of a lot of these experience. So another really short story is that we got contacted by incubator or by like an accelerator program, and they were like, well, we're like the best accelerator for Web3 startup, blah blah, and we will put you through our program, which is like 12 weeks, and then you get introduced to a lot of investors and business angels, and we will get you pitch ready, all that stuff. And then at first it sounded really cool, and after we had our call with them, they actually told us that, well, this program usually it's like 10K, but now you can buy it for just $5,000, and then it's totally worth it, because well, in the end you probably gonna get an investment, but of course no guarantee. So then I was like, okay, so if you think my idea is worthy of your program, right, and if you think that this startup is has some potential, why don't you take just a little bit of equity, like, right, instead of dollars? So if you're just taking dollars rather than a part in my company, then it shows that you're not really believing in this idea, right? So what do you think about that?
So, well, maybe I can say something on that as well. So I know, because we are startup builder as well, and we don't take any money from the startups. Sorry, I have a little cough. But I know that there are programs out there where you have to pay. And they are no scammers, and they are really good programs, but they kind of turned it the other way around, because what they are doing, they are not in the very, very early stage where startups normally don't have money, but they are a little later. And for example, I know some who are really like very good, and they really have amazing connections, and they have an amazing platform, and they have great mentors and things. And then they want to get paid for the connection, for everything they do for the startup. But this is super clear, and you get an official contract. There is nothing like, normally it costs 10,000, but today you can get it for 4,000 or something like this. That would never happen in my, I cannot even imagine that something like this can happen. So yeah, so I know there are programs where you have to pay for, but this is super clear, super transparent, and you can really think about whether you want to get those connections, and then you can decide whether you go in this program or whether you don't. But it's like very transparent, and yeah, I think one of the most important things, what I've just thought about, is that you really think about, or that you really find about the track record. Because if you have, and it doesn't matter whether it's a VC or whether it's a startup builder, there needs to be a solid track record. And of course, especially in Web3, sometimes VCs and startup builders could be really small. And I know that because I was working for small companies. So, but nevertheless, they do have homepage. They do already, at least they made some investments, and then you can really check about which kind of investments they made and what are the startups doing and whether they are kind of still alive. And I think this is one of the most important points, that you really consider or look in detail about past investments. And I think if those investments are positive, then it's a really positive sign. But if you do not know about the other startups or something they invested in, that might be really, really strange signal, I guess. So maybe, I don't know, maybe you can let us know a little more about whether you try to find something out about what the investor did until now.
Also, maybe let's tackle a little bit, how in general do you do like some kind of investors due diligence? So how do you normally proceed when you want to find out if someone is legit? And what are also maybe the challenges that turn out to be difficult, or that turn out to be false friends?
Yeah, well, I would like to say here, my 2 cents. I think that it's really important when you are connecting with new people that you don't know, rather whether they are angel investors or people working for VCs, that you really don't necessarily trust them, but indeed it becomes a bit cliche, but don't trust, but verify, right? So indeed, what are you going to do? You're going to go to Crunchbase, see if you can find them. Find all the information that is out there. You're going to look them up, for instance, on LinkedIn, right? Look at their profiles and their online presence. Like, for instance, how many followers do they have? Are they like real followers, or when they're posting something, is there like zero engagement? This is especially important, in my opinion, for the real scammer investors, right? Not necessarily for a VC or an angel investor that is maybe so-and-so, because of course there's lots of, I think it's not necessarily black or white, that it's either a scammer or a great investor. There's also a lot of people in between. Maybe there is an investor that is an okay firm, but maybe doesn't provide you so much value add, or maybe there's an angel who is actually a great angel, but he doesn't have a great track record just because he just started recently, right? So in that regard, I would indeed always do as much background information and background checks as possible. Indeed, look for past investments, look for an investor accreditation, right? You can even, I don't know, the Security and Exchange Commission is not very popular, but you can even like look in their databases in case it concerns the USA, right? Ask maybe some other people, like your friends or connections that you have in the sector. Like, do you know this VC? Do you know this angel? Have you worked with them? How are they responsive? Which value add do they prefer? And then I think, especially once that you're more close in engaging with them and maybe even signing something at some point, really read everything. I'm a lawyer by education, and it's super, super, super important, as everyone always says, read all the documents that you sign. And even if you're not sure, just consult with a legal counsel. So those are a couple of tricks and practices that you can adopt. Of course, there are much more.
Yeah, you made a good point, especially when looking up in Crunchbase. That makes a lot of sense. But so let me tell you something about this one guy from Paris, right? I was contacted through LinkedIn, and of course I looked his LinkedIn profile up. So he didn't have a photo, but he had a lot of mutual connections. So he was connected to like 10 of my mutual friends, and I was like, okay, well, this seems to be kind of legit, but in the end it turns out it wasn't. So I would recommend everyone to not accept everyone on LinkedIn. Accept people that you actually know. And if someone doesn't have a profile picture, or you don't really know him, just for the sake of getting more followers or more contacts, you should actually reject them, because this gives these kind of people also credibility in the end.
I totally agree on your point, and I think this is really important, because some people just accept like all the invites, and if people want to do that, I'm totally fine. But I think the one thing that you as a startup, or maybe the other way around, me as a VC, should also not do is rely on mutual connections. I always check the profile. For me, it's like I don't necessarily need to know the person, but I always check the profile. And if I have the feeling that it's not like a real profile, that there are no posting, no interaction, nothing like that, I reject. So this is what I'm doing. But LinkedIn is not always like the perfect source to check whether it only helps a little, but not in detail. But I think I have one really important point, and maybe Oliver, you can tell us a little about that. So for me as an investor, if I'm really interested in investing in a startup, I'm really doing a deep due diligence. So it's not like we are getting in contact the first time and we're having a talk, and afterwards I'm going back, and maybe there's always not only one person talking to you, but maybe it's like 2 or 3 people. And they start asking questions. Like, it's not only the pitch deck. The pitch deck is like the easy part, but then there has to be like a financial statement or like a business case. And then it's not only about the financials, but it's also about the founding documents, for example. So if an investor is really interested, I guess he should really start asking all those questions. questions. And it's normally not only like one call, it's maybe like 2, 3, 5, maybe 10 calls. I mean, it always depends how much money is involved, and in which phase, and how well do you know each other. But they start really digging deep. And for example, if they are not interested in what you are doing, like really interested, I might be really curious. So this is, from my point of view, a really important point as well, to if somebody is not, and how good or bad is their crypto, blockchain, Web3 knowledge. So if there's none, this might be a strange sign as well, I guess.
Yeah, if they invest in something they don't understand, then it's probably not the best VC or angel, right? Yeah.
Sarah, would you advise everyone like that it's already a red flag if someone saying he's an investor wants to meet like after first call?
You mean that they want to meet you in person?
Yes, like they ask to meet somewhere, they ask you to I don't know, travel somewhere to get to know each other. Do you think like legit investors would only do this after a couple of calls and after they saw every document and then already investigated you? Or would you say, okay, it can be also normal?
Well, I think it depends. So I think if an investor asks you to go somewhere before you really spoke online, this is really strange. Because for Oliver, as far as I understood, you haven't even spoken to the investor online, because there had always somebody like a proxy or somebody.
Yeah, usually
in between, but not the investor. So I guess, so I know from some VCs that they really prefer to get to know the team and not online. But I mean, it depends. So Paris is something, after one talk, I think it's ridiculous, to be honest. So, but if they did the due diligence and the whole process I just described, and then they are really close to investing, and you had like, I don't know, 10 calls or maybe 5, it always depends. But if he then asks, hey, can we meet? Well, I'm not sure how to answer that questions. I know that some VCs prefer to meet the founder really in person, but for sure not at the beginning. I would say that, but yeah, that's my experience at least.
Yeah,
I would personally argue actually here but that's based upon my experience, that often there is no in real life meeting before an investment takes place, especially not in a bull market where we're speaking about token-based projects. Of course, you run into investors at conferences or at other meetups, but just because the world of Web3 is so globally decentralized, we're all over the place. Maybe my investor, the one is in Asia, the other one, I don't know, is somewhere in South America, and the other one is in Germany. I don't know. So I do think that it's not actually the normal practice that people meet with one another. What I would like to say, also based on my experience, is that there are great investors who are actually sometimes that interested that they come to you. Because last week I had an angel investor fly in to Italy to meet, and we worked on our project. So there are also exceptions and actually great people. The trick here is really to filter out, in my opinion, the right people, the right investors. Of course, they're not everyone has the same needs and wants. Maybe you just want a huge amount of investment from a VC because that's what you need at that moment. Maybe you prefer to work with angels, or maybe it depends on your round. But yeah, I just want to say all the investors come in all sorts and types of people and institutions. So that's important that I would like to know. Another thing that I thought about before is that it's really important to check out the website, right? Especially if you feel that maybe this investor, it's a bit weird how he or she is reaching out to you. Check also their website. Usually you can also find clues there in terms of the language being used, like type of aggressive type of pop-ups, like all these types of things that make you think, maybe it's a bit too much general. There's almost no connotation with Web3. It's some sort of weird equity type of firm from London, supposedly without an address. What also recently happened to me is that people started to directly write me on Telegram. And I think that happens actually to a lot of us founders. with supposed CEOs of billion-dollar or multi-million-dollar firms that directly write to me because they're interested. I mean, that's kind of weird.
That's so funny that you say that, because
They
the
have people
exact
for
same
them.
thing happened to me too. Like, I got so many Telegram messages from like people that they have a profile picture, everything, and they speak German or English very well. And yeah, it's just spam. Yeah, it's crazy. I mean, I guess a lot of startups are in the position that we are in currently, and they're trying to fundraise. And I mean, some people just see this and they sense an opportunity, right?
Yeah.
Especially in the Web3 and crypto area, where they probably think, oh yeah, if he's a founder of a crypto startup, he must be, I don't know, rich or something. But that's of course not necessarily the case. Yeah.
Can I say one tiny last thing there, just because it just popped in my mind, and it's important to know this because I spoke with almost 20 VCs and angels so far, or even 30 for the market research for my app. And most VCs and angels actually, you know, they rely on warm introductions and referrals from friends. So already de facto, a lot less investors are actively reaching out to people. So imagine that you're constantly being connected on Telegram, right? That the chance that they're all legitimate is very, very small. That's just
Right,
one last point here.
That's a good point. Yeah.
Someone in the audience just asked that they believe in the US that investors have to be accredited are allowed to be investors. So as we now have someone from German legislation here and from Italian, Netherlands, whatever. So we have not only German here, not only US. So is there a system around here that also requires accreditation, or can everyone just become an investor by wanting to be an investor? And if there's not such thing, do you think we should create something like this? Do you think there should be something like this to make this scamming less possible? Maybe Sarah, maybe you know most about the regulation in Germany about this.
So, well, maybe 2 points from my side. So if you are an official VC, and if you invest as a VC, you invest money which is not your own, because you invest money from other people, like they are called partners, so limited partners. And if you invest the money from them, you have to have there needs to be a registration, and it's called like Diligence. So there is like an official document, and there's like what you just mentioned. But on the other hand, if you invest as an angel, and I'm not 100% sure, but as far as I know, there are no restrictions. I think I'm nearly 100% sure there is nothing. If you want to give your money to somebody else, and it's your private owned money, and it's not the money from somebody else, because this is always like the difference, whether it's money from somebody else's or whether it's your own money. And if it's your own money, you can do whatever you like. Of course, you have to have a contract. Of course, you have to have all the documents. Of course, you have to take care about processes, but nevertheless, as a private person, you're allowed to do whatever you like with your money.
Okay.
Yes. What I could say here is that I don't know exactly what the regulations are in the Netherlands or Italy. But your question was also like, should we put regulations in place? And I am a bit hesitant with arguing that we should put a lot of binding regulations in place to protect startups. I do think it's incredibly important that we make sure that we're not getting scammed. And we can always think about, especially regulating the institutions, indeed, that they should be registered somewhere, that they should have the right licenses. But putting all binding regulations in place for private individuals, I think that is a bit of a more tricky topic, and I would not necessarily be in favor for that, just because, you know, we all have agency over our own money. in my opinion, even as a startup, and especially as a startup, you should do your own due diligence, right? We also all have our own responsibility, in my opinion, and to use some sort of what I like to call an educated common sense. So make sure that you do your own research, that you learn about how investment procedures actually work, because it's your company. In the end, you are building something because you want to be an entrepreneur. And as an entrepreneur, I believe strongly that you do have an extra responsibility. That's maybe not a popular opinion, but it's the truth, in my opinion. And yeah, next to that, I do also think that, especially where we speak about token-based investments that are happening all over the world, of course, you can always look for accredited investors, but especially if you're a project that is maybe, I don't know, less popular, I can also imagine that a project wants to go for maybe even a non-accredited investor, because however those transactions occur in crypto. And of course, there are usually contracts, right? Binding this type of transactions, but still, whether it's crypto payments, so to say, involved as well, that also makes the matter more complex, even if something goes wrong afterwards. So therefore, I keep saying that the own responsibility is important as well.
To be honest, I totally agree on that, because you said maybe it's not a popular opinion. I think I agree, because you have to do your own due diligence and you have to think about what to do and with whom to work together. I can totally understand that, especially if you're a first-time founder, this is super, super hard because there are so many things happening at the same time. But nevertheless, it's your own responsibility. And if you want to grow and build something, you have to handle those things as well, even if it's hard. So to be honest, I do agree what you're saying.
Yeah, I think we don't need more regulation. So I'm with you on this matter, because you're just creating barriers in the end, right? You have to get accredited, so that's another process somewhere in the government, and you wait for documents and so on. So it just creates more hassle, and in the end, probably there are always ways around it for the black sheep to avoid these regulations, right? And what I think is a better way to do it is to educate founders. So just collect all the red flags. So for example, if you find an investor and he puts a lot of pressure on you, right? He says, okay, we need to do this ASAP, right? Come to city X in the next day or something, then it's a red flag, right? Or if they want money up front, all these things that we figured out here together, we could put them in some kind of wiki or something like that, right? And then founders can get educated, and then they will be able to tell the scams. Yeah, that would be my suggestion.
I don't have a wiki right now, but what I have, and maybe this is the perfect opportunity to say this, we have a Telegram group to do exactly what you just said, to learn from each other, to hear from each other, and to get to know about all these red flags. So I will share my screen right away to show a QR code for everyone who's interested to join this Telegram group and to share their experiences and their thoughts and also their learnings, and hopefully not their losses, about this topic. And another thing that has been addressed in the audience chat is that on-chain investments might be a solution for this problem. So we have seen platforms, you also talked about it, where there are lists of angels or other investors where startups can register and then try to find funding over there. And now there are maybe also on-chain solutions where you can get fundraising through on-chain protocols. I did not investigate this further yet. Do you think this might be the solution to the problem of scammers, especially having in mind that we still have like also scammers in the crypto system? Like, let's face it, last year was rough. Or do you think it's just the same problem in another dress?
Wait, is it something like an ICO, or maybe you can explain it to me, because I'm not quite sure if I understand it completely. So do you give away your company's equity in form of token, like in an ICO, or how does on-chain funding work then?
To be honest, I did hear about it just now in the chat, and I just
Okay.
Like I just did a little.
Well, maybe
bit
the person in the chat can elaborate a
Yeah,
little bit on it. Yeah.
the person can would love to write more about this and to know more about it. I just Googled a little bit, and it seems to be somehow automated token distribution on chain as investment way.
Yeah, I can personally imagine that it's some sort of an airdrop that will only take place once that you have made a transaction, and once that maybe that it's also a part of it is also held in escrow by the smart contracts, I can imagine. And I do think that's, I mean, I'm not a DeFi expert at all. I do think that can be a solution for some of the problems, and especially it could also democratize access to actually making investments, because as you know, a big problem today, in my opinion, is that it's either VC money flowing into the crypto space or rich angel investors. And of course, there are the DAOs nowadays and some other community type of building solutions, but it's still very undemocratized, the access to actually the whole thing of investing. So in that regard, it can help. I do think that if we use this type of on-chain protocols, there's still always the risk, right, of exploits or of bugs or of people running away with whatever is being held in a smart contract. So I think there's also some extra risks flowing in. And then again, is it only for tokens? Because I do see it a bit problematic that you can actually distribute equity over a smart contract. I don't see that happening unless you have tokens representing the equity. Yeah, but that's just my initial thought.
Yeah, so I have the only thought that I have in addition is that unfortunately scammers are really creative. So to be honest, we don't know what is really meant and how the solution might work, but there might be, so scammers might have new ideas how to use it. So, but I don't have an idea what is meant with it.
Okay, but do you think there might lie like a solution in the Web3 technology itself? Can we overcome scams at all when we try to put everything on chain?
Well, so maybe. So I think there are the solution to this problem is probably twofold. First is the education part. So make people more resilient to scammers by telling them the techniques and what they should look for, what red flags. And yeah, so the other part would be building some kind of reputation, right? I mean, because if you're like something like Crunchbase, if you're an investor and you made some investments prior to that, maybe you can prove it on chain or something like that, right? Or prove your worthiness, your identity, and your trustworthiness by using Web3. That might be a use case. Yeah.
I do still think that as the world is not black and white, a review kind of system would probably work best, just because there are great VCs and investors and then there are complete scammers. But what do you do with the ones in between? I do think that the whole yes and no kind of nature of technology of 0 and 1s kind of makes that tricky. I don't know what could be done with, I don't know, zero knowledge proofs and other type of technological solutions that in terms of identity, etc. But again, that is mostly, those would be such highly technical solutions that again, it would make investing for the masses even more difficult, because already investing today is difficult for the masses, and then crypto is already not widely adopted. So if we're going to combine investing and crypto, I think, you know, it wouldn't make the whole ecosystem more fair in terms of democratization immediately. And that is something I personally very much care about, but that's, yeah, my take here.
So we definitely have to work on the user interface, I guess, to make investment a lot easier. In my mind, there was just a thought, because I heard a guy talking about a process, and I didn't dig deeper in that, but I just heard him that he told an audience that he's thinking about a new process, an investment process, that you don't need to go to the notary anymore, but you can put the GmbH on chain, and then the investors can just get parts of the GmbH via on-chain and without notary. But to be honest, I'm sorry, I don't have any further knowledge on.
But maybe, as you just mentioned processes, and as we now also talked about what process steps are red flags, could you give us a short example or a short exemplary process how an investment with like a legitimate investor, for example, like you and your company Zara, how this looks like? So what should startups actually expect?
So you mean a classical investment process if you're on VC and you're a startup, and what happens?
In the Web3 space, yes.
Okay, so somebody already mentioned it. Very often there is somebody doing introduction. So especially in the VC space, you know each other, or many VCs know each other. And so you have many connections, you're building a network, and sometimes you just get introduced, but not only by VCs, but also by startups, by friends, by whomever. So there are so many possibilities. Of course, this is not the single point of contact, but sometimes there's just somebody getting you in contact with a startup or the VC. And then you first, normally you send out the pitch deck, or the startup is sending out the pitch deck to the VC. The VC is having like a first look. And if the VC is interested, they ask for a first meeting. And then you have like the pitch meeting, which is approximately, I think an hour should be there, or should be planned, because like you have the pitch, maybe like 20 minutes, and then you have questions. And normally, if the VC after the first pitch seems to be interested, they kind of start with a due diligence process. And I think this is what I already explained earlier. They really ask you many things, not only about, so there normally is like a technical guy, and he really is talking to the CTO from the startup, trying to figure out whether the solution is a great one, and whether the CTO is really able to build the product. Then you have the business part, where you really talk about the business case, the numbers, the potential market fit, the potential growth. And then you have like the legal part. Is the, for example, GmbH already founded? Where the documents, who owns which part? Is it like 2 founders, 50-50, 3 founders? So they really are trying to figure out whether the startup can survive. And that can take sometimes up to weeks, because sometimes VCs are really busy. And sometimes, of course, they say very fast, like, okay, we are not interested for any reasons. But if they are interested, then they do this due diligence phase, and it can take up to weeks. And yeah, so this is like the whole process. Of course, there are many meetings in between. They ask questions, you have to answer emails. And if they are then really interested, then you can think about a contract. And therefore, for the contract, there are also different options. And if you agree on everything, then there will be a contract signed, and afterwards the money will be transferred. This is like the normal way. And maybe some last thing. I think for a startup, it's really important that you not only get the money, but that you also can work together with the people, because the VCs have they have such a huge network. And so I think it's important that you really would like to work together with them, especially if you have like only, I don't know, 2 or 3 VCs or angel investors. You really should take care that you have a good vibe with them, and that you really want to work together with them, and that they really agree on helping you, because there will be so many problems where you have to find a solution, and it's always great if you kind of have a partner that can help you.
I think on the last one, all of us agree as founders of startups, very much.
It helps a lot.
Thank you very much for this broad overview of like a legitimate investment process with a VC. One question that came to my mind was like, do people who are like legitimate and who are really interested in helping others and who are making introductions and everything, are they really aware of their function? Like when they, for example, accept everyone on LinkedIn, or are they aware that they are unwillingly being the trust anchor for scammers? Or do we have kind of an information gap here, so that investors or not only investors, but all people who are just randomly accepting everyone are not aware and should also be educated more or less the same way like we need to educate startups, as we just said, about scammers, that they can be then trust anchors for those scammers. What's your take on this, maybe, Oliver?
Yeah, that's a point that I made earlier in this discussion. So if you are a mutual connection to another person, that gives this person trust in the end. And it can be the difference between a decision, hey, I'm going to meet this person, or no, I think it's not legit, I'm not going to meet him or her. So I definitely would advise people, especially VCs and business angels, to be careful. And I mean, there are a lot of these platforms and networks where you sign up, like business angel networks, where you present your startup and all that stuff. And another piece of advice that I got from there is usually they have like an internal chat function or messaging function. So you upload your pitch deck and put in all your information, then you get contacted through the platform. But if a person insists on communicating outside of the platform, and this happens quite a lot, then it's usually a bad sign. Yeah, because they don't want their content, their messages to be moderated by the platform. And that's also something to be aware of. But yeah, I would agree with what you said before.
Have you been aware of this, Sarah, that you as an investor can also be perceived as a trust anchor for scammer?
Yeah, well, to be honest, I'm only in that space for 1 year, so maybe not that long, not even 1 year. And I mean, you said it at the beginning, some people ask for discussing it the other way around. And from my position, I experienced it especially the other way around. So I had it several times that I was really, not sure about the founder and the product. And sometimes it's like they're trying to put pressure on us as well, like FOMO, like, okay, we have so many investors and they all want to invest and you can only get a share, but then you have to be really quick. So I experienced this especially the other way around. Not that often, to be honest. So it was not like what the others said, like once a week. So I experienced, to be honest, really only once. So not very often. And I didn't know that it is so difficult for a startup to. So to be honest, no, I didn't know about all those scammers the other way around. I didn't thought about that in detail, and I wasn't aware, to be honest, especially not about that it's such a common procedure and that there are so many people out there doing this. I was really surprised, and I think it's really bad. But everywhere where money is, there are also like people who want to get your money. So yeah, it's tough.
Yeah, that's
sorry, go ahead.
No, I just said, yeah, that's probably true. And my next question would have gone in your direction, Alexandra. Building a platform to put investors and startups together. How do you try to overcome this? How would you try to make it impossible, or you probably can't make it impossible, but how would you try to minimize the risk of being scammed for startups and investors, like Sarah just said, on such a platform? How would you make it possible to red flag something?
Yeah, I do. So let me start off by saying that in Web3, so much today is about, of course, by the very nature of Web3, is about transparency and about not trusting people per se, but indeed, as I said also before, verifying things on chain, getting facts, not opinions, etc. But of course, when you are doing business with one another, there is still a lot of trust involved, as we are seeing today from this discussion, right? And it's not only trust being involved, but there's also emotions involved. If you are, as a project, often rejected, because let's face it, we often get rejections, right? When we are presenting our amazing pitch decks, or even after jumping on lots of calls, it happens that investors are not interested or don't reply anymore sometimes, or bring up other reasons. So then if finally someone is interested in you, you might also be a little bit blinded. And I understand that. In terms of the app per se, I think there is a couple of things you can do before using the app, during the app, and after, right? That's how I try to construct certain guidelines. For instance, of course, I will implement a verification process that people actually have to create their profile while either connecting, for instance, with LinkedIn. This is probably something I won't incorporate in the first version just because it's quite pricey to build, but also via email or even telephone, right? That is just a part of the verification. Then, of course, once that the app is up and running, you can implement some sort of AI-based fraud detection system that actually looks at suspicious behavior. That's just part of the story, though. Of course, as Oliver and as I think we all agree on, education is key, right? You really have to tell people, either through these types of events that we're doing today or through writing stuff, for instance, how to spot suspicious behavior and, yeah, indeed, give them some examples on red flags, etc. So education will be a very important part of the website and indeed of the app as well. Then, of course, another thing I want to implement is the reporting. So if you are matching with one another through my platform and then you're chatting with one another, there will be a button that actually allows you to report that person. So that we then, as the main office, can actually look at what is happening and then potentially ban that person from the app, either by banning their IP address or banning their phone number or banning their email or banning their device. So those are all things you can do. Of course, other things you can do is, for instance, use background checks. So when people are uploading information on their profile, you can really look at it. I don't want to do that, just because I don't want to be a middleman in between. I know lots of other platforms actually function in that way, but I don't want to do that just because of the nature of the app and the nature of Web3. I leave that really to the users of the app and to the market and to the algorithm to actually suggest you the best people for you. And of course, what you can also think of potentially is monitoring messages. But I'm also not going to enter in that territory just because it's often we're speaking about sensitive information. So I'm going to do a peer-to-peer encryption of the chats. We're speaking about money. We're speaking about lots of other sensitive information, potentially IP. So I don't want to suggest to potential users that we are monitoring that. So there's always choices to be made here. And I think education, ex ante procedures, ex post banning, etc., are always how we can actually kind of mitigate this risk. But then still there always remains the part of your own responsibility and common sense. To use apps and other platforms and so on.
Thank you, Alexandra. Okay, so I think we're basically through. Also, the time is mostly up. So maybe some last words from everyone, starting with Zara.
Yeah, well, I think I said it, but I think it's good to repeat. I think the most important thing is that the investor doesn't put any pressure on you. He is not telling you about any returns that you get guaranteed or that you have to pay anything in advance, and that he's really interested in what you're building and your product. And because that takes time. And so I think scammers might not invest the time. And I think this is a very important and clear sign for me.
Okay, so watch out for the ones that are interested in putting time into it. Alexandra.
I think it's not great to say, but maybe it's better to lose a potential opportunity that you're really not sure about than to actually get scammed, because due to the international nature of Web3, right? We cross boundaries, we cross jurisdiction. Once that you get scammed, it's really tricky to actually turn the situation in your favor. So in that regard, a little bit of a prevention is maybe better than actually have it happening to you.
Yeah, I agree. And I think, well, being a founder, just stay focused on your product, stay resistant, and be alert. I mean, don't fall for scams. Always look for the red flags. And if something sounds too good to be true, it probably is. So you will still get your funding. Fundraising is not easy, but good ideas do get funding. And yeah, it's a question of time and resilience.
Thank you very much, everyone. Thank you for being with us, to the audience. If you want to share your own experiences or your knowledge about red flags, then join us in the Telegram group and let us discuss there. And see you in the next event, hopefully.